please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon. Welcome to MF Corner, where we'll be answering all of your mutual fund queries, and we're going to help you create wealth by benefiting from the magic of compounding.
Absolutely, Sumaira. You know, what a day to speak on the mutual fund, because while the market is very close to record highs, the mid-cap index is still 15% away from its peak. And some stocks, they've gotten clobbered. So why take the risk of stock picking yourself? Just let's leave it to the professionals.
That's right. And, you know, the professionals have done a great job. The mutual fund industry has grown six-fold over the last 10, 11 years to about 23 lakh crore rupees. That's what, 1/5 of the banking industry now?
Absolutely. I mean, just goes on to show the conviction of domestic investors. In fact, all of last year, they pumped in close to 80,000 crores. This year so far, they've pumped in close to around 60,000 crores in the cash market. So that is some conviction. And here's hoping that this initiative of ours further cements your investments by bringing you in touch with top financial advisors.
Let's get started answering all the mutual fund queries which are pouring in. Manoj Nagpal, MD and CEO of Outlook Asia Capital, is in our studio this week. Today, and he is our expert this afternoon. Manoj, thanks very much for joining in. Let's get started. Our first query comes in from KK Reddy, who's on the line with us from New Delhi. Hi, Mr. Reddy. How can we help you?
Hi, good afternoon. I am holding 3 mutual funds, UTI Opportunities Fund, Axis Long-Term Equity Fund, ICICI Focused Blue Chip Fund, and I am doing SIP for about past 5 years. And I want to continue with the same funds for about long term for 20 years. So currently I am gaining for about 33% till today price with the latest NAV, and I need to invest more on per month, 20,000 per month. So shall I continue with the same funds, or is there any other funds to explore?
Okay, so the query we had from your end was that you had a SIP of 10,000. Is it 10,000 per fund, or is it 10,000 collectively in these 3 funds?
No, 10,000 collectively.
Okay, so that's the UTI Opportunity Fund. You have the Axis Long-Term Fund and the ICICI Focused.
Focused Blue Chip.
Okay.
Right.
Manoj, any questions that you may want to ask him? What's your advice?
No, so I think, you know, the portfolio is reasonably large cap oriented, and what Mr. Reddy has to look at is that, you know, the UTI Opportunity Fund has now become the UTI Value Opportunities Fund. So there has been a shift in the name and also a shift in the mandate. The other 2 funds continue with the same name and the same mandate and are leaders in their category. However, the UTI Value Opportunities Fund, you know, is currently needs to reposition itself to a value fund. Currently, it holds, you know, stocks like HDFC Bank, IndusInd Bank, and typically growth-oriented stocks. And that's where, you know, there is some kind of a repositioning that is required, and there's a higher volatility. So maybe you would want to, you know, relook at that and shift it to a multi-cap fund like a Motilal Multi-Cap 35 or some other multi-cap fund, and that should really help you go ahead with these 3 funds in future.
All right, so for now, the advice is that, you know, it's too large cap oriented, the portfolio that he has. And for this, the UTI Value Opportunities Fund, he may consider shifting to the ICICI Blue Chip or the Motilal Multi-Cap, right?
All right, so that is advice coming in for our viewer here. We have another query coming in. Mr. Hariom, he calls us, Hariom Mittal from Gurgaon. Go ahead, Mr. Mittal.
I have at present, I am having SIP in SBI Blue Chip, Mirae Blue Chip, and UTI Nifty Index Fund.
All right. So SBI Blue Chip, Mirae Blue Chip, as well as
UTI.
UTI. And you, how much money are you investing in these funds, sir?
Yes, at the rate of 10,000 in SBI, 10,000 per month, at the rate of 10,000 per month in Mirae, and 3,000 per month in UTI Nifty Index. These are the 23,000 rupees per month. As SPI, SIP, I am making the contribution.
All right, Mr. Hariom, if you don't mind me asking you, how old are you, sir?
The investment is my family's name. I am 76 years old man.
All right. We like the fact that even at this age, sir, and for the longer term, you have been protecting your wealth and you are investing in SIPs. What would you say to a person who's at this stage of his life? What sort of funds should he put the money in?
Yeah, so we really don't know, what is the overall asset allocation that he's looking at. And, the risk profile at that age and assuming that this is his normal source of income is currently limited, ideally we, advise people to go into wealth preservation stage. But one of the important points he highlighted was that these are investments in his family's name and maybe his children and, others. So we assume that his risk profile is not really misaligned at this point of time. So assuming that his risk profile continues to be on a higher side and he wants to accumulate money for his family for the next 10, 20, 30 years, these are three good funds that could look at. SBI Blue Chip is a good large cap fund. The UTI Nifty Index Fund, obviously, mutual funds tend to outperform index funds over the long periods of time, but the last year has been an anomaly and, index funds are doing better than active funds. So over the long term, however, he may want to get into an active diversified fund, large cap fund, if he wants to shift over from the new UTI Nifty Index Fund. And the third fund, that is the Mirae Emerging Blue Chip, has again got, earlier it was a mid cap fund, now it has become a large and mid cap fund. So there is a repositioning of this fund. So you need to think that whether you want to continue in the same fund or want to add a mid-cap fund to add to this. So that's another thing that you should consider and maybe shift out from the Mirae Emerging Fund and go to a mid-cap fund.
Manoj, I actually have a follow-up question on this. Given that our investor's age is 76, he's retired, would it be a good time for him to now start moving some of his equity allocation towards debt, etc.?
Yeah, so if you're in a wealth preservation mode, then ideally you should not do SIPs into equity funds. Even if it's for the long term, you may not be able to take over that volatility. And if you want to, and at that age, if you say ideally you should do an SIP in a debt fund or a equity saver fund. An equity saver fund is a category where equity allocation is around 25 to 30%. So there, if you're looking, then you should consider the Axis Equity Saver or the Kotak Equity Saver. Axis Equity Saver is a slightly more aggressive fund with allocation going up to 35 to 40% in equity, whereas the Kotak Equity Saver is more conservative at between 25 to 30% equity. So if you really want to be in a only pure wealth preservation mode but still want to take some kind of a risk, then an equity saver fund is a better bet to go rather than pure equity funds.
All right, fair point there, Manoj. So does that old adage of 100 minus your age into equities work?
Yeah, so that's a good starting point to go ahead with. Most of the people in India, are like the, rustic person where the equity allocation is usually between 5 to 10%. A huge allocation happens to real assets like real estate, 50-60%, and the rest 35% goes into debt. Now, so that's where we always say Indians are extremely underexposed to equities, either through mutual funds or direct equities, and wherever they are exposed to equities also, it's primarily in the mid and small cap space. So we say always that it's a good starting point to, look at as your age as the allocation to debt and the balance into equity, and you should increase your allocation going there based on risk profile. Always assess your risk appetite and risk profile before taking the equity allocation for your portfolio.
Just keep an eye out on a couple of stocks from the large caps. In fact, the Nifty has slipped a tad bit, 50 points from the high point of the day, and currently the stocks which are leading it lower, Vedanta, that one should come up for you, down about 3.5% from the high point of the day, as well as Infosys. Infosys should come up for you. Remember, the company reports its results tomorrow. That stock has slipped about 3% from the high point of the day. So both these large caps actually adding some amount of pressure to the Nifty. Just about 25 points upwards of 11,000 is where we trade. The mid caps now down by about 100 points. And this time, I think this is the best time to get our viewers to get their queries answered. We have Ramesh R calling us from Hyderabad, investments in a couple of funds. Go ahead, sir.
Yeah, good afternoon, sir.
Yep, go ahead. What's your question, sir?
Sir, actually, I have investments in Franklin Templeton Prima Plus in a ship mode. And one more fund, UTI Unique Link Insurance Plan.
All right.
Can I continue? Can I continue those two funds and suggest two more funds?
All right. All right, all right. So he's given us fund details. What would you suggest?
Yeah, so there are two funds and there are two distinct funds that he's looking at. One is the Franklin India Prima Plus, which is one of the oldest funds in this country. It was the first funds that are launched under Kothari Pioneer and now is managed by a Franklin fund. What has happened in this fund is that it has always been a multi-cap fund. It has always maintained that mandate over the last 20 years. And at this point of time, the name has just changed to become Franklin India Equity Fund. So there is a name change at this point of time that should not concern you. What is really important is that in the last 3 years, the Franklin Prima Plus or the Franklin India Equity Fund now has been an average performer. So some of the calls, it has not been able to ride the market momentum, and hence its performance is a little tad par. So it's usually now in the last 3 years from the time you have invested, been in the second quartile or the third quartile. We believe if you're looking for the long term, it should not worry you at all and you should continue with the fund. On the other fund of the UTI Unit Linked Insurance Plan, it's again, the only fund which is a ULIP fund offered from the mutual fund category, and it is, it was launched in the 1970s, 71 at that point of time, and it is one of the oldest funds. But we always say don't mix your insurance and investments, and for this fund also we suggest the same thing. However, if you're continuing for the long term and you've already finished your locking period in that, you can consider withdrawing and going into a pure, diversified equity fund rather than continuing with a ULIP fund. It doesn't serve your purpose, we believe, at this point of time.
All right. Mr. Ramesh, I hope that advice works for you in future. Do remember that insurance is basically a risk cover and mutual funds are basically your investment vehicle. So do remember that. Up next, our query comes in from Vishal Prasad. He has written to us from Kolkata. He wants to invest 25,000 rupees in the India Bulls Liquid Fund, and he wants Manoj's advice on if it is the best option. But I know, Manoj, a lot of people, even when we've been doing this MF Corner in the past, have asked you about the best liquid fund, and I know your reply has always been that choose the cheapest fund. Am I right?
Yeah. So when you're looking at a liquid fund is kind of a commodity. Most of the liquid funds in the country today will offer you the same benefits, the same features, and also similar returns, because liquid funds can only give you returns which are just closer to the call money rates. Currently, call money rates are in the range of 6%, and most of the funds will be there. So what will differentiate really choosing a liquid fund is primarily looking at, whether the customer servicing has good facilities like instant redemptions. Instant redemptions is a new facility that is there where, you can quickly have the money within the next 10 minutes into your bank account. So if you are looking at investing, you should look at that kind of a facility. You should look at lower expenses. A liquid fund, clearly the returns are dependent on expenses because the portfolio quality of all the funds is going to be the same. And as I said, the India Bulls Liquid Fund, tick marks the right check boxes across all these categories, except the size of the fund. The size of the fund is around 6,000 crores, and the largest liquid fund in the country today will be the Birla Cash Plus with around 35,000 crores of assets. So you may want to choose a slightly bigger fund if that gives you more comfort. But if that is not the criteria, then the India Bulls Liquid Fund will serve your purpose because it has all the other features. It has got extremely lower expense, at this point of time. So the India Bulls charges around 17 basis points is the expense ratio. That's extremely competitive in the market, and that will give you returns that are in line with everybody else.
All right. I just want to quickly tell our viewers we're also live on Facebook at this time. We're getting a lot of questions coming in, but fortunately today we can't answer any of those questions. Though on Tuesday, we'll have Firoz Aziz will be joining in, so we'll try and take up a lot more queries at that time. For now, Manoj, thanks very much for joining in. Thanks for your time and your advice.